from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Nashville. It is Thursday, January 28th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you are with us tonight from COVID, U.S. politics, and the world economy to clarity. This is CB3 Live. So when we started this thumbnail at the beginning of the week here, I was going to talk about mega cap earnings and the political influence, which I will do. But in the meantime, there's been a discovery of sorts of the art of short selling and what to do when the short sellers get caught. And we're going to talk about that extensively. I probably had 8 people this week say, are you going to cover this? Including somebody about an hour and a half before the show. So yeah, hold on for that. If you don't know anything about a short squeeze, it's not what you give your spouse when you're really in a hurry getting out the door. It has to do with the markets, okay? If you are new to the show, be sure that you subscribe to us on YouTube. Click the little bell and you'll get notified every time we go live. Be sure to follow us on Twitter and Facebook and LinkedIn. We're all over the place, okay? And tell your friends, please. We're trying to grow our audience. It would mean a lot to us here at CB3 Financial if you'd pass the word on. Corona America, a lot going on, man alive. Okay, so almost 25 million vaccine doses given so far in the U.S., which is good because we're continuing to discover new cases, 152,000 just yesterday, total confirmed cases, well over 25 million, still less than the previous pandemic. We're almost a year into this now, and you could argue that we really started knowing about this in January of last year, but the shutdowns didn't happen really till early March, but I'm not going to call it a full year yet. Still, the pandemic rages on with us, and in fact, it's not affecting equally populations across the U.S. It's gotten particularly bad here in the South, in Tennessee and other areas, although we seem to be pretty spared here in Tennessee. And you saw on the graph last week, those of you that were watching, that we're giving out doses and we're staying ahead of the pandemic, at least to some degree. Obviously, I always want to recognize the human cost in this pandemic, but from a monetary perspective, and that is our show, the International Monetary Fund believes that the global economy will have a strong recovery from this pandemic. And of course, I've felt that for quite some time. I've expressed that. I'm glad the IMF is agreeing with me, and they think it's because of the vaccines coming around so quickly. So graphically, they've updated their projections. So in October, you'll see the light blue, and in the dark blue is just this month, okay? So the world has picked up just a little bit, but look at the U.S. The prospects for a U.S. economic recovery much, much stronger than they were expecting back in October, and that's just 3 months ago. Same with Japan, same with Latin America. That's positive news. So President Biden is now announcing that he's going to increase 200 million additional doses. And he wants to basically make it to the point where anyone in the U.S. that wants a vaccine can have it. And by the end of the summer, which still is a pretty amazing time frame when you think that that's just 18 to 19 months after the pandemic started, the U.S. should have enough vaccines to fully vaccinate 300 million Americans, which is by far almost all the population. So let's call it 91, 92%. And that's good news. What what this really means is now that this is picked up and every week that I do the show, we're seeing an increase in vaccines available. Those in a retirement home are not left to be in isolation. This is particularly close to us and maybe to some of you as well. Alice's parents have been in a retirement home, and the isolation has really been difficult because you have to visit behind glass. Sometimes you can't even go in the building and you have to sort of wave at their room. It's a terrible way to spend your final years of your life. So these vaccines really can improve the quality of life for the retirement homes and for those people who have comorbidities. The definition of that is who have one or more, usually more, life-threatening illnesses, and they're the ones that are most at risk, as we all know. So why is this taking so long to get the vaccine out? Well, according to the CDC, and this is in the U.S., not the European CDC, 38 million vaccine doses distributed as of Thursday, but only half that many have actually been given. So why are they in storage? In fact, there was even I haven't substantiated it because I don't mention anything here that doesn't have two sources, but through one source, I did hear that actually some had to be thrown out because the refrigeration wasn't kept at the proper level. So that just seems crazy to me, but quite a few of these vaccines are just sitting on the shelf and need to be administered. I don't know. I'm not a doctor. I don't know what's holding this up. I mentioned this on the Monday night program for those of you that watch that Pfizer is saying that Pfizer are pleased that it looks like our vaccine is actually working against the mutations or the variants. Okay, you see the South African variant. It's something that's discovered there that's a derivative of COVID-19. But if these vaccines are actually working on the variants rather than having to start over again with another vaccine, that is also a positive. So mostly good news this week. So this playbook now, after we have been with this for almost a year, after a year of study, what are scientists saying? We need to protect businesses. We need to protect the elderly, those with comorbidities who are at higher risk, and meatpacking plants, financial services. So what's the strategy here? It's actually a pretty short list. Mask wearing, worker pods, meaning enclosed areas in businesses, and good airflow. Now, I'm glad that they mentioned this good airflow. Those of you that have been watching this program know that I showed a video probably 4 months ago now on airflow and what they're doing to go in, modernize these workspaces, new air conditioning systems, filtration systems that they're putting in. So we've known about that here at CB3 Live, and you guys have been aware of it, but the CDC is now coming down and saying, yeah, well, that's pretty important. Way more important, for instance, than surface cleaning, food cleaning when it comes in from being delivered, temperature checks, plexiglass barriers, etc. That's the important thing. You can believe this or not, but this is what the data is showing this week. Mask wearing, worker pods, and good airflow. It's one of the reasons why you're not seeing huge outbreaks from the airlines, because I think, if anything, their filtration systems have been stepped up to a greater degree. Now, I had 2 clients send me this notice today, and I had seen it as well, but I really hadn't paid that much attention to it. But this is a big deal. Merck has announced that it's discontinuing its development, not so much the administration, but further development on their vaccine candidates. Why? Because they performed poorly. Well, what does that mean? Because the immune responses were actually inferior to those seen after a natural infection. So what this means is, for people who don't have a high-risk situation, the comorbidity that I mentioned earlier, they actually saw results with people recovering more quickly without the vaccine and had better antibodies built up inside them. This literally is just hot off the press about 7 or 8 hours ago. I want to thank the 2 clients who sent this to me. And at this point, I just want to say to you guys, I don't have a repository for all this information. I read between 30 and 33 sources of news every day, every week to bring you this program. But if you guys see something that you think our community here would benefit from, please send it to me. Please don't send it to me an hour before the show. Although, if you have to, I'll try to squeeze it in. But the point is, we're a community here. It's not just me lecturing here to you guys on Thursday nights and Monday nights. So send me something if you think it's of use. So here we are, one of our classic governors. Gavin Newsom is in a category with Meg Whitmer and Andrew Cuomo, and there's just no other thing to say, but these guys are fools. Why they have shut down their states and now they're having to reopen them. And do you think that this is because they're enlightened? No, it's because he's getting close to the 1.5 million votes in recall that could take him out of office. What I'm seeing from earlier in this program, the slides earlier, is that it is possible to develop a situation state by state, city by city, company by company, where you can dramatically reduce the risk of catching COVID-19 without totally shutting down a business, a city, a state, or a country. And it's about time that some of these blue state governors saw this. And I'm sorry for that being a political statement, but I can tell you the culture here in Nashville is a very different situation than it was back in Illinois. Nonetheless, I'm glad to see that Gavin Newsom is wising up, okay? This map I just premiered last week with you guys, showing the number of doses given, total distributed. You see that gap there? That's what we talked about earlier. Not good. If we're distributing doses, we want to be administering doses. And some of the states that are doing very well, the ones in dark, we want to see all of these states in the U.S. turn the darkest color because that means the shots have been given, the doses have been distributed, and the doses have been used. Okay, and the two, it takes two administrations of the vaccine there. So anyway, I'll continue to report that to you. For the night's question here, is the COVID-19 vaccine safe? Answer A, yes, I've been vaccinated. B, well, I plan to get vaccinated as soon as it's available for my group. Now, that's an age thing or a location thing, region. C, maybe for somebody else, but not for me. D, no, I think natural recovery for non-at-risk patients is the better solution. And we just talked about that moments ago. So I'm going to wait for you guys here on about a 25-second delay. I'm going to look in the notes and see if anybody's got any questions. Feel free to ask me questions that are not, even on these sheets here. I'm happy to answer them. That's the whole point of the show. You have one-on-one access to me. And hi from freezing Michigan. Yes, okay. Warm wishes from Southern California. We have people from 4 time zones. It's great. Glad to see that. All right, Andre from New York, good to see you. And we'll see what I have to see about GME. Hello from upstate, -6. Oh, Tom, is that wind chill or is that actual temperature in Lake Geneva? Man. Okay. Handpan Man, Montana. Okay, good. Welcome here. Welcome. Keith, couldn't chat with my new 5 on the iPad now. Okay, Keith, good thing you're here. All right, what do we got? We got B, B, C, D. Hey, Karen, how are you? Good to see you. Yeah, I'm kind of with you, Karen, on that D. At least today, I haven't made up my mind yet. A lot of B's, though. Dr. J, good to see you. A lot of B. Andre, D. Charlie, B. Yeah, well, Charlie, you're young and you're going to be down the road there, but okay. Okay, Martha. Jerry Chapman, good to see you. And a B. Greg, B. Okay. What about GME, guys? I'm going to be talking. Just give me some time here. Okay. Good answers. We'll see how it goes. So the world economy, this is the second topic. Those of you that are new to the program, we cover COVID first and then the economy and then politics. And that all adds up to what I use to make decisions to manage money for the people on this program that are clients. A lot of people on this program are not clients, and that's okay. We're just glad to have you here. Okay, so for the year, the NASDAQ up 3.5, the Russell 6.7. The leaders have not changed since the first week. S&P actually negative on the year now, and the Dow is unched. For those of you that don't know, I put that on here for my trader friend, and that's with a D, not with a T. Trader friend. Unched is short for unchanged. It means it has not budged since December 31st. It actually has gone up and down, but hasn't moved. Our programs year to date, almost 4% for CG. Pretty happy with that. Guys, this is not a typo. 13.5 for SG. Just just kind of astounding. And we've had a couple winners in here that just blew it away. Do not hold me to this for the entire year. I will not be able to do that every month, every quarter. Not going to happen. But we're happy with this out of the gate start. And DG, which has a much lower beta, much lower risk than the other two programs at 4%, we're happy with that, beating the indices with the exception of the Russell. So what's driving this? The heavy hitters, guys, the mega cap stocks. That's in the thumbnail. Apple, Microsoft, Amazon, Facebook, Google. I've put both share classes of Google in here. There are actually two. And I'm not sure if you know that or care, but there are two share classes of Google, okay, when they changed their name from Google to Alphabet. So, and of course, the other company that's driving that up, Tesla. Look at the red there. Now, in this case, they should have used green because these are positive quarters, 6 quarters in a row of profits, okay? And that's one of the reasons why Tesla has been a runaway. The other reason is because of a short squeeze that started over 4 years ago and has continued to this day. Hasn't gotten quite the press that GME has gotten, but it has been a short squeeze. Those of you that don't know what a short squeeze is, you will by the end of the show, okay? All right, so I want you to look at this chart. Now, this is the S&P 500, and I know it's tiny, but it's just important. Now, I want you to lean in. I'm going to do it. I'm going to do it with you. Do you see a little crosshair there? That's the latest week. All right, now really, really lean in as far. I can't go any farther, I'll hit my mic. But you guys lean in and look at that tiny red bar. I had two clients call me this week or text me and say, oh, I saw my account. I'm going, in the context, okay? It's recency bias. When things look really bad for a day or a few hours, you see that little red bar? That's the down week that we had the first 2 days of this week. Now, look at the context since 2016. Okay, you just got to hang with me on this. 30 years I've been doing this. You're going to see moves like this. Van Morrison wrote the song, Mama told me there'd be days like this. There'd be days like this. Mama told me. And guys, there are going to be. We haven't had a significant downturn at all since March 23rd of last year when the S&P bottomed, which was the bottom of the bear market that lasted 5 weeks, okay? But that's the reality. That's the S&P since 2016. So what happens is emotions get involved. On this shoulder, can you see me on camera, sits greed. On this shoulder sits fear. And they talk back and forth. And what's worse, they don't talk quietly. They talk in each ear. So your brain is having to get these impulses all the time. And it drives you emotionally crazy or unstable. And that's why we're here, because I'm an objective trader. I try not to do it based on emotions. I didn't mean to click ahead there. So we just 2 days ago, we were at the 65 on the greed meter, and now we're at 40 on the fear. Well, that only lasted for a day because, as you well know, today, Thursday, the market made a nice recovery. Not a full recovery from the losses on Wednesday, but still a real nice one. So let's dig down into the specifics of the data. So why do I keep saying we're going to be in a secular bull market for such a long time? Well, we just got GDP data, which we'll get to in just a few moments, which officially took us out of the recession. I mean, literally until this data this morning, we were technically in a recession because you have to have 2 back-to-back quarters of positive GDP, all right? So big ticket items like cars and houses typically fall in recessions, but they didn't. They both had a great year, and actually it flipped. Last year, the opposite happened. So this is a real interesting occurrence that, again, bodes well for the long-term health of the market. Let's look at employment, real GDP versus non-farm payroll, okay? So when GDP is negative, payroll almost always turns negative because jobs are being lost. Look at this huge drop in the first quarter of 20. Well, of course, that's because they shut down the economy, all right? Was that the right thing to do? I'm not going to get into that right now. But what happens when you look at more of the year? So then we had this bounce back in the third quarter, and then the fourth quarter was positive. It just came out today. All right, but for the year, it was negative. And here's what we need to look at. Now this chart is all GDP, okay? One is a short-term, 1 year, and then 3 year. This is going back to 1930, so let's just call it, almost a century. When you see that red bar for the year in 2020, we were down 3.5%. And that's because the first and second quarters were so devastating that even the 32% in the third quarter And now the 4% in the fourth quarter were not enough to overcome that drawback. But what's the trajectory? Which direction are we heading in? We're heading up. And if you look at this chart, what do you see after these big red downturns in the Great Depression, after World War II? Slight moves down in the 50s and 60s. These are negative GDP. What happens afterwards? Huge moves up, right? That's what's going to happen this time, in my opinion, based on everything that I'm seeing, because this is real history. This is why I show you data. This is why I don't give you hunches. This is why I don't bring you the drama and the histrionics that the news programs bring you. This is the data. Is it possible to have two red downturns, two successive down years? It's possible. It's only happened twice in the last 100 years, after World War II and during the Great Depression. I don't see those cases, and I'll show you data going forward here as to why. So the expectation for GDP was 4.2%. GDP, reminder, gross domestic product, total sum of all goods and services produced on our shores in the U.S., okay? Expected 4.2, came in at 4.0. I'll take that, 0.2%. And there's two more revisions. GDP comes out in January, February, and March, looking backwards to the fourth quarter. And the last one is the final revision. And then in April, they look back at the first quarter. Okay, that's how it works. So fourth quarter GDP at an annualized rate of 4.0, that's strong. That looks like the chart that you saw on the previous page. The key takeaway of this is that growth moderated, certainly from the third quarter when you saw that huge bar, 32%. Okay, but at the same time, in light of the concerns about the election, this was not a smooth election, guys, by any definition. Okay, still pretty good data. Okay, the pace of housing starts was the highest in December since 2006. The key takeaway from this data is that growth is basically driven entirely by single unit dwellings. So this isn't commercial buildings. This isn't, four flats. These are single family homes that people are hiring builders to build for them. In a pandemic, in a recession. Remember, until just today, this morning, we weren't out of a recession. So the previous 9 months, all this is happening, and it's good data. New home sales up modestly, but median prices up big. That means the cost per house is higher. I've been showing you all of this data on the weekly and the monthly data, but this is now quarterly data that I'm showing you because it takes, time to accrue this. So key takeaway from this report is that new home sales counted by contract signed moderated from the torrid pace from July to October, but still very positive, okay? Existing home sales, all right? Why do I keep showing you so much about real estate? I tell you this every week, but for those of you that are new, GDP, gross domestic product, is made up of three components. It's made up of consumer spending, of business spending, and government spending. What's the biggest of the three? By far, 67%, 2/3 is consumer spending. What's the number one high ticket item for consumers to spend? Housing. That's why this data is so important, because it's highly unusual that a person would be optimistic about building a big home, but then be eating canned tuna during the week. It's just not going to happen, okay? So existing home sales, highest since 2006. What's the key takeaway? The supply of existing homes is at an all-time low. You guys have seen that in previous episodes, okay? And it's just going to be a pressure point. The realtor who sold us our home here in Nashville said, we're just almost in a desperate situation. When a house comes on the market in Nashville, there are 25 people that sign up to see it. There's not even enough time to get in line. It's just gone that fast. And it's not just Nashville this is happening. And you've seen me over the past few weeks, we've looked at Phoenix, we've looked at Austin, Texas, other areas where this kind of drive is happening. Part of the reason this is happening, guys, is homeowners are staying put. Okay? They come in, they get there, and they stay there. Now, for the record, that's what we're doing here in Nashville. We might have moved during the middle of this, but I told Alice the only way I'm leaving here is in a box, okay? After I've spent my life managing money and music composing, I'm going to try decomposing, all right, in a box. That's the only reason I'm leaving here. We are staying. And it just means less and less inventory becoming available because there's less transiency, because people are realizing what? They can make a good living working from their home, and businesses support them in that decision. Okay? All right. New orders for durable goods. This just came out a few hours ago. Barely got it in the program. Up 0.2% still. Key takeaway, manufacturing activity held up reasonably well despite the surge in coronavirus cases. We know that the second wave has been particularly devastating. If you remember my graphs, I think it was 3 weeks ago, when that second wave actually comes up higher than the first wave as far as number of deaths and hospitalizations, although that is curbing now. But it's been difficult. And yet consumer confidence, look at this, up 89.3. 100 is just a super solid number, but 89.3, the optimism about the short-term outlook is outweighing the weakened view about current business and labor market conditions. So sure, airlines, restaurants, other service industries, theme parks, movie theaters, those businesses are struggling. But the optimism that we will be over this, partly driven because the vaccinations availability, is why consumer confidence is so strong right now. I had to put this data in here. I'm not sure, again, two sources, and I'm not sure where this is headed, but investment, foreign direct investment has been increased going to China. I think it's probably because they got over the pandemic quicker than we did. That's a really hot potato political statement to make as to why they did. But the reality is, I don't think this is going to last. I still think the U.S. will be the number one destination for foreign direct investment for years to come, certainly in my lifetime. But this will be the first time this past quarter where that happened. Now, we did have a really bad second wave. I'm going to be watching this trend as we go forward, okay? U.S. household net worth, home prices and stocks soaring, and so people's net worth went up. We've seen this stat. That was just confirmed. This is just a reminder again about the GDP. So 4%, expected 4.2. Well, I'm mentioning this to you twice because I want you to get in the habit of this. GDP, sum of all goods and services produced in the U.S. And that includes foreign companies here that are producing it in the U.S. We used to judge our economy based on GNP, gross national product, which meant everything that we did here and on foreign shores, but we decided the Federal Reserve decided, and the Bureau of Labor Statistics, made more sense if we looked at every activity here in the U.S., even that of foreign companies that are producing on our soil. And I think it's a good idea. So 4%, great number. Okay, here we are. Anybody remember Trading Places? I don't know if you've ever seen it, but I love this comic. So the guy on the left is representing the hedge funds. The guy on the right's the media, and there's Reddit and GME with Eddie Murphy. It's a fabulous movie if you can get past the profanity, and it really shows what trading is like. So let's just start here. First of all, there's no video tonight because I had to just spend time on this. All right, I want you guys to understand what's going on. First of all, nothing illegal is going on. Okay, what is happening here is the wild frontier. All right, this is pure capitalism at place. All right, in place at this time. The goal of buying anything is to buy low and sell high. Can we all agree on that? The goal is to buy at a low price and sell at a high price. But it doesn't always have to be in that order. You don't have to buy first and sell second. Buy first, sell second. You do not have to do that. You can sell first and buy second. Okay, and that's what's going on with short trading. So I want you to type in here. I'm going to put a question in here, and I'm just going to type I understand short selling and short squeeze, and just type yes or no. And you don't have to be afraid of anybody, because this is just stuff that not everybody knows about, and it would just help me to know. Okay, so I understand short selling and short squeezes. All right, and just type yes, no, yes, no. That's all I need to see, and I'm going to just keep talking while you guys are filling that in. All right. So what's going on here? So there is a contingency of private investors that have had a ton of time on their hands because they haven't been going to the office. And so the rise of the retail trader in America is really pretty amazing. And I think it's a good thing because for the longest time, so many people had just said, well, the institutions are doing, it's rigged. But now individual traders have come in. So let me read your answers. Hey, Charles from Orlando, only a little bit. Okay. Hey, no. Okay. Hey, Mark, how are you? Good to see you. Yes, learn from Tom Bowley. Yeah, good for you. So you and I are both Tom Bowley fans. Yes, mostly yes, 90%. Okay, so I'll try to make this interesting for those of you that know what it is, and for those of you that don't, you will by the end of this call, okay? And it's important because what's happening here is, in my opinion, that's why they call this app on the left-hand side Robinhood, taken from the rich, given back to the poor. Yeah, it's really not totally accurate. That's what the Robin Hood movie's about. But this is basically leveling the playing field, finding a strategy, and catching those arrogant hedge fund managers off guard. Okay, that's what's happening here. Okay, so GameStop just happened to be one of the most beat up stocks. I remember taking my two sons to GameStop. You drove there, you got out of the car, you went inside, and that's when they actually sold DVDs, probably before DVDs, whatever the little cartridges were, and they just loved going in there and looking at it. Sometimes we'd buy something, sometimes we'd just look, okay? Really dated, right? I mean, you could almost say it's a Blockbuster. But the reality is the price just sat there and sat there and sat there. Look on the screen, you see the green line, and then boom, just went off like crazy. Now, what happens? A hedge fund or some other big player comes in and sells short. They sell something they don't have. How do they do that? They borrow it. Okay? And they sell something at $10 and they want to see it go to zero. A short seller has one goal. They want the stock to go to zero, bankrupt, out of business. Now you can say, well, that sounds horrible. Why would anybody want that? Well, because if they've sold it at $10 and they, quote, buy it back at $0, they make $10 for every share of it they have. We say, well, gosh, that's horrible. How could they allow that? Because it provides liquidity to the markets. If someone wants to do that, they should be entitled to be a short seller. I have no problems with that. In fact, I appreciate their liquidity. I really do. Okay? And what this looks like on a graph is you see the little itty bitty green and red, and then all of a sudden, bam. Okay, what happens is a whole lot of traders who have been short the stock have to rush out and buy it. Now, I've got a pretty good illustration at the very end of this section, so hang with me on this, okay? That's what happens. So trading volume surges and basically, strain the online brokerages because so many people were jumping in here. For those of you, I see Karen, you're going to remember, and Keith, you're going to remember the British pound in 1993 when George Soros and his hedge fund literally crushed the British pound, and he made reportedly $1.5 billion, which in today's money is, I don't know, 10 billion in one trade, because the British government was not prepared for someone being on the other side of the trade. They thought that their pound versus the dollar was at a lofty value, and so they weren't defending it. Well, here's the thing. If you're going to go into the market, you can't do it naively. You have to realize there's somebody else on the other side of that trade, and they are not your friend. Okay? Nobody in the market is your friend. I'm your friend because I want to help you understand this and help you succeed. Okay? But when all these retail traders, all of those in the Robinhood community jumped online, Fidelity, E-Trade, Interactive Brokers, Charles Schwab, Vanguard, just encountered all kinds of delays because they jumped on the opposite side of the hedge fund managers. They bought GameStop. Does that mean that the company fundamentally, gosh, did they introduce new games? Do they have new locations? Do they have better pricing? Do they have a subscription service? What did they do? They didn't do anything. They don't have to do anything. Okay, this is why I say that those that trade on fundamentals are really trading on funny mentals. Funny mentals. I'm a technical trader. I watch price, and that's how we make the decisions for your accounts. So the number of short seller inquiries on the internet, look back here in 2005, you can see these spikes. These are people that are searching because they see something going on. Here, look at Tesla here. Remember I mentioned Tesla had a short selling rally, okay, 40% in 1 week, which at the time we thought was phenomenal. Well, not so much now, okay? Look at this enormous spike here, okay, because WSB basically said, we want you guys to rally around and we're going to trade GME, we're going to trade AMC and a few others. I'll show you those charts in a minute. And the interest just spiked. And when enough people get on there, even if they're small traders, it's enough to rattle hedge fund managers who are probably trading without stops and have probably almost even forgotten they had the position because it's been such a flat stock for so long. And that's what happens. These short squeeze, these short selling, naked shorts, it just spikes up like this, okay? And it's not just to one stock. This is a list, the Goldman Sachs list of highest shorted interest names. Look at this huge parabolic move. It's not even parabolic. Parabolic has to have a little bit of a slant to it. This is just vertical, okay? That's just happened in the last week or so. It's really pretty amazing. Obviously, at the lead of this is GameStop, okay? And then BlackBerry, NCR, some others. But GameStop is the one that everybody's noticed. And again, it's just because it was totally undefended by the hedge funds. It was coyly done. It's not like they went in and bought, all these Robinhood guys went in on one day and bought, 600 million shares. It was done over time. So it was the frog boiling. And by the time the hedge fund managers realized what was going on, they weren't able to cover their shares. Now, I'm going to explain this in just a minute, okay? So that's what happened. I want to just pause right now, guys. Let me look in the chat box here. And normally I don't do this except in the sessions, but I really want to do it. So Andre, I'm curious whether GameStop can issue new shares right now then, but it's back down once it crashes. It takes time to do that. Good question. I suppose they could. I don't think that they will. It's not to their advantage to issue shares. That would dilute the ownership. If anything, they would buy them back in to create scarcity, which means there's even fewer shares for the hedge fund guys. Good question. Good question. Jimmy, I bought GME, exploded at 84, thought it was a genius selling at 156. Well, you were a genius at 156, but you just didn't know it was going to go to 400. And so, we just don't know. We don't know what's up ahead. So good questions, Guy. Type more in the box if you have them. So AMC, GameStop, these are just companies that were sleepers. I mean, it's not like Tesla, which has always had a huge amount of short interest. But GameStop actually had a higher than 100% short interest. And Tom Bowley, who is one of my favorite analysts, even he can't figure out how this can happen. Candidly, I can't either. But it was to 140% short interest. And one of these days when I figure this out, Tom and I figured out, he's got a seminar this Saturday. I'm going to see if I can figure it out from him. But it's just an anomaly. Do you guys remember back in April when crude oil traded negatively? And that's because the people that own the shares people that own the contracts of crude oil couldn't find anybody to take the other side. So crude actually went negative. You had to pay somebody to take your physical crude oil. And that's what happens to markets. Markets have buyers and sellers. And when there is a mismatch, a gross mismatch, that's what happens. Let me give you an example. I've got another one coming up, but here's a simple one. Two guys walk into a grocery store, okay? And they see there's like 20 grapefruits. So they, circle around and eventually they have all the grapefruits in their cart. They pick up their cell phone, they call their buddy in the parking lot. And yeah, go ahead and run in and say that now. Their third buddy, there's two of them in the store, one runs in and says, "Hey, have you guys all heard? The FDA just announced grapefruit stops the aging process." It stops the aging process. And so everybody in the store makes a beeline, and these guys are just standing there with Cheshire smiles going, "Well, if you want it, it's $1,000. Okay, is that wrong? You can decide on that. But at that moment, the demand far outstrips the supply. Okay, that's what's happening here. That's all it is. It's just supply and demand. So average daily trading volume. Look at NEO. Now we own NEO. NEO has been a short play as well. AMC, we have, not participated in this area. So just so you guys know, I might do this for my own account, but I don't do this with your money. You have retirement programs with me, okay? Nobody's doing speculative stuff like this. We're not talking crypto this week, okay? We're going to skip crypto. So that's what you can see here. So I promised you I was going to give you a good explanation. Let me just check the message board here. I had no clue what you're doing. I've heard that GME is going to the moon. Can you explain what that means? Well, the moon is a high place, okay? And it'll go to the moon if there are more buyers than sellers. And I don't mean to be flippant. Inova, thank you for asking that. The reality is the market goes higher until the very last person is bought. When there are no more buyers, it cannot go higher. It can't. Then it can only go down. Nobody wants to be left holding the bag as the last buyer. And whoever bought, and I don't know where GameStop, where is it, 442 or something? Jimmy, somebody type it in here. They were the last buyer, and then it plummeted back down. Now, can it turn around and go back up? Absolutely. Does it happen? Absolutely. Okay. Bought a couple puts, sold for the profit thing, dropping back. Yeah. So option trading a little beyond the scope of this right now, but there is most of this short covering has been with the Robinhood people buying calls. Okay. At screaming high volatilities. So they have massive theta risk. Sorry guys, but Karen, you're on the line and I know that you're aware of this. So, I don't understand how institutions can own 117% unless they're buying it on leverage, but even then it wouldn't be 117%. So those of you that are just kind of head spinning right now, I'm going to tell you with this example what short selling is. Okay, so let's say that a couple parents and their son are living in a home and it's winter. And the parents go on a vacation, a week, and they say to the son, look, all you have to do is just keep the snow out of the driveway. It's not a big deal. It really shouldn't be hard. And, if you get that done, then we'll have a nice surprise for you when we get back. So the son goes out and here he is. He's cleaning up the driveway and everything. And he goes out the second day, it's only an inch of snow. And so here's the thing. The next door neighbor just doesn't want to go out. And so he says, you know what? I want to buy your snowblower. And the kid's going, well, that's kind of cool. How much you going to give me for it? And he said, well, yeah, they're going in the store for $250. I'll give you $200. The kid says, okay, sure. So he sells the snowblower to his next door neighbor. Now, it's not his snowblower. It's his parents' snowblower. So he's now short a snowblower. Now, he knows that they dropped the price, okay, because the season's almost over. And he can get a snowblower for $150 down at Ace Hardware in his town. And he says, I'll just go down there tomorrow and get that. And I'll make $50, right? Because he sold it to the neighbor for $200. Remember, you always want to buy low and sell high, but you don't have to do it in that order. Buy low, sell high, but you can sell high and then buy low. And that's what this guy's trying to do. He's sold it for $200. He knows he can go down to Ace Hardware and get it for $150. Okay. The next day he wakes up, no snow at all. Okay. He goes online. Now the snow blowers are $125. All right. Next day, the sun's coming out, everything's melting. Now they're down to $105. You can buy a snowblower, $105. He's going, wow, this is good. I need to just keep waiting on. Maybe it'll go to $85 when it gets to April. Of course, the parents are coming back in a week. As you can imagine, there is a different ending to this story than the young man thought. He wakes up the third day and a huge blizzard has come in. A huge blizzard. He can't even get his own car out of the driveway. So he calls an Uber, takes him an hour and a half to get to Ace, and there's nothing there. Nothing there. So, hey, we got a shipment coming in. The guy behind the counter tells the little boy here, or the teenage boy, well, how much are they? How much are they? He said, well, we've already got them sold. He said, yeah, they're going for like $1,000 now. He said, oh, no. He said, yeah, $1,000. If you want to give me, I can just say I sold it. Now, I'm not picking on the unscrupulous Ace dealer here, okay? But he could say, yeah, give me $1,200 and it's yours. And it's like, $1,200? He said, that's where the demand is. Look outside. It's 2.5 feet of snow. And so the kid who sold short at $200 Thought he was going to be able to buy it at 150, then 105, whatever. Now he's got to pay over $1,000. He got caught in a short squeeze. It's a weather short squeeze, but it's the same thing. It's the same principle. When you sell short, you have unlimited risk to the top. When you buy a stock, you can't lose more than you put into it. But when you sell short, you have unlimited risk. Does that make sense? Okay. If it doesn't, type something in the box. I'm going to keep going, but I will check the box here. So, always finish this section here. We're seeing earnings come in. Last week was like 95. I knew that wouldn't last, but we're still at 83%. And we have, about a third of the S&P 500 reporting, and that's pretty good here at the end of the first month. So I'd love to see that 83 hold. Okay. So let's ask this question. The U.S. stock market is A, a fair market for buying and selling. B, fair for big investors, but not for me. C, rigged against all but the largest investors. Or D, pretty much a casino for everybody. Pretty much a casino for everybody. All right, so you guys give me your answers and any extra questions on the short selling section, and we'll keep going. Okay, interesting that you're buying puts, Andre. I mentioned that earlier. It's good for you. Jerry, TD Ameritrade put trading restrictions on a number of stocks, including GME. Yeah, that's true. So I don't day trade. I have one of my sons that texted me today and said, yeah, I'm now in GME and I'm doing this thing now. This son makes more money than I do, so he can afford to have a full-time cardiologist next to him monitoring his blood pressure. Okay. And if you're trading these kinds of positions, that's what you need, so good for him. Okay. Thanks, Doc, on the snowblower thing. I was trying, guys. A fair market for buying and selling. We got a bunch of A's here. That's great. Hey, Debbie, how are you? Good to see you. Between A and D. I suppose so, Karen, especially if we're trading options, right? But yeah, you got to watch that theta, guys. Massive decay when stocks turn around. We'll get into option trading sometime. All right, let's go forward because the political situation, executive orders, guys. I did this on Monday. There's been a couple since then. Memorandum freezing approval of the final rules passed in the Trump presidency, rejoining the Paris Climate Accord, U.S. entry from majority Muslim countries. So that's, and some people are, seeing that as a reduction of safety. Freezing approval of, let's get forward here. Revising immigration enforcement, orders incorporating undocumented immigrants. A lot of this stuff is social, and that's why I'm not really covering this in the same depth that I did when Donald Trump was in office. But this third one here, the Keystone Pipeline, this is a big deal. We have 2 viewers from Montana. This pipeline goes straight through their county. Jobs will be affected. Their economy will be affected. And it's bad news. It's just bad news for people that are working in that industry. And so we have to pay attention to that. We have to pay attention to that. And that's, again, this is a financial program, not a political program. And when those overlap, we bring the stories to you. So this is a positive. I mentioned this in one of my tweets this past week. Senator Joe Manchin and Kristen Sinema, I don't know her, but I definitely know Joe Manchin. They are Democrats that are splitting with the Democrat majority, saying that they do not want the filibuster removed. The filibuster, for those of you who are not aware of it, requires 60 votes in the Senate to pass legislation. The House offers legislation. The Senate has to approve it. Takes 60 votes. The filibuster could be eliminated if enough people in the Senate voted for that. But when 2 Democrats go against it in a 50-50 Senate, it's not going to happen. If you recall, President Obama managed to get Obamacare through with 60 votes, 60-40. And then, of course, those senators and representatives pretty much got booted out the next year in 2010. So anyway, Mitch McConnell is happy about that. I think for us as investors, it's good because it takes the attention away from politics, which frankly, I'm ready to do. And I bet you guys are too, and on to just pure economy. So it's good for Mitch. These last 3 slides I showed last week, but just important to understand that Biden really wants to pump up the economy with this $2 $2,000 per person, or $4,000 for a married couple, additional stimulus, and it will then, basically exceed every other country in the world as far as what they're doing to help their citizens. How are they going to fund this? They're going to fund this with tax increases. Look at the blue bars. The Biden tax plan in 22, actually the 21, which is this year, is at the bottom, but still there's nothing in the 70s, 80s, 90s, zeros, or 2010, 2020 for decades that will be a greater tax increase than what I'm expecting to see. Does this affect us? Absolutely. Do I know how yet? No. This is why I keep bringing these programs to you every Thursday, okay? Entitlement spending will go up. This basically pushes more money into the economy. Jay Powell, chairman of the Federal Reserve, will now be working with the Treasury Secretary, Janet Yellen, who is the former chairman of the Federal Reserve. I actually kind of like her, as well as I like any, financial person that works for the government. I don't see this as a huge issue other than massive spending and increasing the deficit, which, as long as interest rates are low, is not catastrophic. So last question for tonight, and then I'll check the message board here. In 2021, I think politics will play a greater role, a lesser role, about the same role, or I just don't know what to expect. Let me know what you think on this. All right. Handpan Man. I like that name. Be somewhat. I think it's back to the previous question. So, took a risk today. 50 shares of GME at 210. Surely went up, took my prop and sold. Good for you, Jimmy. I don't know if you have the same cardiologist that my son has, but I admire you guys that want to do that kind of day trading. Not something that I'm interested in doing. Good snow analogy. Thank you, Keith. D, agreed, snowblower analogy. Good. B, on a lesser roll. I think it's going to be lesser. I do. K, A. Okay, a greater roll in 2020. We'll see, K. Nova, B. Thomas, A. Martha, A. Yeah. It's probably not going to play a greater role unless we have some big surprises, like Lisa Murkowski of Alaska switching to the Democrat Party. Wouldn't surprise me. Rob Portman announced he is not running for re-election in 2022. That's Ohio, which is pretty much a red state right now. So that creates some uncertainty. Okay. I'm kind of with you guys. I don't really know what to expect, but we'll see. Debbie and B, lesser role. Okay. Very good. Like that. So guys, that's where things are for tonight. I always end with this, 2 Timothy, for we've not been given a spirit of fear, but a spirit of power and love and a sound mind. I think it's positive to stay positive. I think it's positive to stay positive. And that's what I'm doing. That's why I continue to bring these shows to you. It's my deeply held belief that we will not only survive this pandemic, this political year, which now for the most part is behind us, and we'll even survive short squeezes. And we will emerge a stronger people and a stronger nation. I hope that I answered your questions tonight on GME and the other shorts. CB3 at cb3.com. If you have any questions, I'm here to answer them. Is it something that you really need to know about to function in your daily life? Probably not. But it is an aspect of the free markets, frankly, that is, I wouldn't say uniquely American, but certainly it is exploited here more like the Wild West than in many other countries. I think it is a leveling of the playing field between, I don't want to even say the rich and the poor, but the big shots and the little individual traders who now are starting to garner attention. And I think that's a positive. So really appreciate you being with us. Hope you found it educational. Come back next week. I always like to say that at CB3 Financial Group, we don't just manage your assets. We become one of them. From COVID, U.S. politics, and the world economy to clarity. This is CB3 Live.